Howdy, everybody. Welcome to our last This Week in Crypto of January here. It's been a whirlwind of price fluctuations, volatility galore. I'm joined by Maxim today, and the two of us are going to talk about everything that's going on with the Fed's decisions, the changes in price, what kind of metrics we should be looking for right now when things kind of look correlated between crypto, gold, and the S&P, and try to decide exactly how risky, going full throttle on our portfolios is right now. Because frankly, it's been a pretty big beatdown, as we can see here by our latest week screener. And people are wondering, how long is this going to last, and when are things going to start to turn positive again, so we can get back to the mindset that we had in 2021, which is, crypto's going up and everything is euphoric. So Max, from what I'm seeing right now, everything still seems to be pretty tied to what's going on with the Fed. And the Fed, as we were just discussing before this call started, it appears to be raising rates. It's an inevitability. It hasn't happened yet. And right now, traders across all different sectors are trying to figure out exactly how they should allocate their portfolios. What are you seeing yourself?
Few points I believe it's important for us in crypto. And one is maybe the most important, that the crypto is maybe the last market which is least regulated, kind of very open, very wild west. And therefore, whatever happens in the real world of, let's say, of all of economies connected, crypto reacts first, very fast, very, very wild and harsh. And it's easier. Also, crypto is compared to other markets is smaller, still smaller. We hope it will become big over time. But it reacts very fast and it moves first. And this is a subtle thing, but actually it's very important. We move always before all other markets. And you need to keep it in mind when observing all the decisions. It's not that crypto react to stock market like some people say. No, it's not. Just crypto started to move back in December already. And at that time, few people talked, but it was already quite a strong move of US treasuries or German bonds. You take any of them, moving up yield, and crypto market started to price it in, and stocks only joined later, much later. Yeah. And taking this into account, we could say that because of these two things, crypto market moves first, and this is a very wild one. It's also overmoved quite a lot. I personally think we already moved enough. We should start bounce recovery. I would say from this level, but it's not investment-wise as always. It just feels enough fear and everything. And but the important thing to always keep in mind: we react in crypto market first, and then actually the rest reacts. And what connection between crypto market and Fed? Actually, I can share one just for a few minutes.
Of course.
Let me see. I have it here. I'm still not so familiar with Skype. Yeah, I think. Maybe you can see it now? Yes. Okay, you can disregard this waves counts. I know that some people are not so happy about tilted waves. It's okay, you can see I'm using it for my purposes. So as you see, the yield on US Treasury has been moving for a very long time, actually. Actually, it's from August 2020, it started to move. And now already, well, we are like move very long distance from 0.5 to almost 2%. And the reason, or the fact that now everyone is talking about, it means we're reaching the peak. And from what I saw, there is a good chance we will spike one more time, and then actually they could be it for a moment. Slightly above 2%, and it will start going down. Just because crowd always pay attention to topic when it's very ripe and it's late to the stage. So now follow this train of thought. The moment we are above 2% on US yields, and this is, by the way, US 10-year treasuries, this is what market is doing. And Fed is actually reacting to it too. So this is a very root of all discussions. First this happens, then Fed reacts, and then the market reacts, and somewhere in between, crypto market moves. And when we go slightly above 2% and then start correcting, I'm pretty sure crypto market will react and will start pumping quite heavily. The question is, will it do once we reach above 2%, or will it try to do now? This is an open question. Yeah, and, no one knows. I don't know, and I don't want to claim I know. The only thing I know is that nothing goes in one line, and from the structure or the attention of the crowd, we are about to make top in yield. And market decided yield, this US 10-year treasury, which is on the screen. And the moment we turn around, crypto will react first. Stock market will follow later. So this is like a big picture. I'm personally following, but of course, inside the big picture, there are a lot of very important pieces of information we also can cover. And yeah, Brian, I think I'll stop. You can take it over.
That's a really good recap, Max. It's, you know, there is definitely correlation between what's going on with the yields and not just crypto, but the S&P and gold as well, of course. I'll share my screen again because we had a poll that went up yesterday, last night, my time, to see what the crowd thinks about which sector crypto will be most pegged to in 2022. And if I go down to that said poll, if I can find it, just had it open. There it is. So we asked which outside sector out of these four will cryptocurrency prices correlate closest with in 2022? And overwhelmingly, people decided the US stock market is going to be the maker or breaker for crypto this year. Not just right now, but throughout 2022. That's 3/4 of the votes going to one out of the four options. And that really indicates that people feel very heavily that the Fed and its decisions that it's making right now are going to impact whether crypto can quickly recover or whether it might, you know, slide further. Based on that 10-year rate chart that Max just showed, it indicates that we might have finally seen a top due to all the awareness to it and due to the Fed announcing that it is in fact going to make this rate hike, I think by March, if I'm not mistaken. Nothing is, of course, a guarantee, but this sounds about as sure as it can get, barring some cataclysmic shift in how the at least the U.S. economy is doing things. So that being said, you know, going back to this chart comparison here, Max mentioned how Bitcoin tends to react first. He brought up a really good point about how because of the obviously speculative nature and smaller market cap of crypto compared to the S&P and closer to gold, because of its lack of regulation compared to the other two, things tend to react very quickly in crypto, especially because it's a 24-hour cycle, never turns off. And you know, it's hard to say exactly when the correction started. I'd argue it probably was around here in early December when the Fed, you know, people started to anticipate the FOMC meeting in late January. And that's when we had this big drop going from 57K all the way down to, I think it was 46.5K, pretty much overnight. And then we kind of had this shift, second wave down, shift, third wave down. And this is kind of the fourth wave that we just had last week. And now we're experiencing a lot of volatility. Now, notice how gold kind of followed afterwards. I'm sorry, not right there, more so right, right here, it started to flatten out and then recover. This is very common when it comes to the S&P struggling and sometimes crypto struggling too. Gold is still kind of known as that market hedge that people flock to, especially those traditionalists and the older investors who maybe have never jumped into crypto. Right now, more and more people are talking about crypto being known as that hedge. But regardless, you can see that as of 2 weeks ago, the S&P really started to plummet after its initial plummet in the beginning of the month. Gold was starting to react positively. And then the Fed news came out, and going into the Fed, even the day before, gold was already selling off like crazy, and it's dropped a ton back below 1,800. And the S&P has dropped too. Basically, all three of these are quite in tandem right now. And what we really want to look for is a sign that crypto is not being pegged to what is going on in the US stock market. That would be a sign that it is able to act independently. And through many of our back tests and studies in the past, we have found that crypto thrives best when it has zero dependency on the S&P, sometimes even negative dependency, where crypto will go the opposite direction of the S&P. But that hasn't really happened in quite a while. So we would wait for something like that. And I think, this is of course not investment advice, but I think with this all but confirmation that the interest rates will hike up within the next month or two, things will start to look a lot better. And Maxim's prediction of the markets rising has a very good chance of coming to fruition. So keep that in mind, and we can kind of jump into some of the market health metrics now to see what's going on and what's happening independently from all of these fundamental events that are impacting prices kind of outside of what's happening through the raw circulation and on-chain metrics going on with Bitcoin right now. So that circulation, which I just mentioned, appears to be going up a tiny bit. We're on a 7-day smooth moving average right here. And you can see that pretty much since mid-August, we've had a slight, gradual rise in the amount of unique tokens interacting on the BTC network. And that 7-day moving average actually crossed above 200K for the first time since early December. So roughly a 5-6 week high there. And it's still maintaining that pace quite well right now. I'd be pretty surprised to see, circulation drop off, especially if Bitcoin continues this super volatile cycle that it's been on, because this kind of volatility is what really attracts both a lot of those buyers and sellers to come on and move their coins when they see a big, psychological barrier broken below 35K or potentially a future barrier broken above 40K again. That's what really gets things stirring, and utility tends to rise when people are at their most, interested and euphoric and panicked all at once. We can look at the circulation from the NVT model perspective as well, which we've done on many of our previous calls. And we can see after the start of the month, when it was actually up here in the red section, it's gradually dropped down. The ratio going down is a good thing, indicating a higher ratio of circulation compared to the current market cap. And now Bitcoin is back in semi-bullish mode, actually for the 4th straight month, which is interesting because obviously it was able to rise through many of these months that didn't see much circulation compared to where the market cap was. And then it corrected after it was in semi-bullish territory. And that may seem a bit counterintuitive, but it actually kind of makes sense because there was this big drop off, and a lot of this was just recovering back to its all-time high right when it first started to get into the red way back in March of last year. So now we're up here come October, and the circulation is picking up, but the price drops anyways due to a variety of reasons, mainly in my opinion, the whale dumping that really started in late October. And now we're back here, and with enough patience, we tend to see these yellow, green, and green zones coincide with upticks in price. It doesn't mean it's going to happen tomorrow, next week, or even by next month. But as long as circulation stays in this zone, which we see here on this chart as a continued rise, it's going to be likely an inevitability, not quite a perfect inevitability, but very close to it, that prices will be able to recover back above 40K and beyond. Many things still need to happen, right, with the Fed and letting their announcement come to fruition with the rate hikes, but it's looking promising that we have neared a bottom, which the technical bottom happened. If I zoom in here, technical bottom happened on January 24th when we got to just a little under 33.5K. So that was quite the plummet, and that's obviously more than half the drop since its November 10th all-time high. And that being said, we can look at some other metrics to really piece together what's been happening since that all-time high. The natural next chart to look at would be daily active addresses, where I've drawn a line from the peak. Actually, I'd say this is technically the peak, and this was the all-time high, right? Or at least the day before it. And daily active addresses at this time was way up at 1.19 million. So that means, well over 1 million addresses were interacting on the BTC network, making buys, sells, what have you. And that tends to be when things become polarizing, especially when you see kind of an isolated spike like this away from the pack that wasn't nearly that high. And that showed that there was a lot of, polarization, people capitulating on the positive side and kind of deciding to get either super euphoric or start taking profit. This was, of course, in the midst of whales beginning to take profit themselves, which ultimately is the most important milestone in terms of prices being able to thrive or dive. And really, since that time, daily active addresses have dropped. And where we are now, the latest day, full day that we had was 904,000 daily active addresses. So that's a little over, I think, something like 25 to 30% of a drop compared to where it was back around the all-time high. We can smooth move average it as well and get a little more of a clear perspective. And it isn't a major drop off, mind you. The last few days have been, interestingly, but overall, we are still above where we were 6 months ago in late July. So that's a promising sign that, it's not a serious concern. But obviously it's not at that range that it was around the all-time high. And we're just going to see how this plays out over the next couple weeks, which is probably around that time interval that we can all watch to see how the smoke clears after this FOMC meeting that happened yesterday. Okay, so that is the on-chain stuff. I wanted to give a little bit of time to look at the funding rates that are going on right now because it's quite interesting. I'm going to just look at the Binance one for now because it kind of sums up what's going on with trader decisions at the moment. Overall, as you'd expect, the trend has been to short Bitcoin after this much fear has gone on following the over 50% retracement that happened from a couple months ago. And with negative funding rates, it generally is a better time than average to come back in and add to your positions or start a new position because of the fact that shorts, when occurring in large quantities compared to longs, they are inevitably going to be liquidated by any sort of significant rise. And when they're liquidated, that essentially acts as, I've got an emoji for it, everybody, as rocket fuel. And when we see enough of this, just like we saw back here, the results tend to be enormous in the positive direction. if it continues. Now, of course, there have been plenty of times where people shorted very temporarily and then it jumped right back up to even. It was, as of yesterday, in the last really 2-3 days, we've seen a lot of shorting followed by quick snaps back close to even. And we are close to even once again, but it is not, it is still clearly in a shorting pattern rather than a longing pattern like this. So all things being equal, this is a better spot than average to be long, considering how many people are betting against the markets right now, especially on the largest exchange in the world by volume. We also have this model here, which many of you have downloaded and gotten access to by plugging in your Sandbase Pro APIs. This is the funding rate model, which indicates whether people are short or long on average when combining 5 different funding rates altogether. That would be Deribit, DYDX. Let me double check. I'm gonna make sure I got it right in the data tab here. Yeah, Binance, FTX, Bitfinex, DYDX, and Deribit. So they're combined all together to give us an output on what the average funding rate is across those exchanges per project. Now, not all projects will have funding rate data for all 5 of these exchanges. Sometimes it'll be just 1 or 2, but we do the best we can with the data that we have. And the overwhelming answer right now as to where funding rates are going is they're all still short. Not all, but many, the vast majority are still short right now, where very few, the only one that's really in serious red territory is Digibyte. The rest are universally either in neutral range between 0 and 0.001 or in negative range. And we can see Bitcoin right here is pretty much right on the border at 0, which overall is actually a good thing. It means it's kind of negative because the resting state is 0.001 for most of these. But look at many of the altcoins. Look at Zencash way down here at negative 0.021. We have Anchor down at negative 0.019. It doesn't necessarily mean that the ones that are most shorted are the ones that are, most likely to go up. But all things being equal, if you are staying the course with the assets that are seeing a lot of shorts, and then the markets proceed up, those ones that have a lot of potential short liquidations are the ones that can really end up thriving the most. So keep that in mind, that the crowd perception, people putting their money where their mouth is, appears to be that shorting is what people want to be doing. And we know fully well that you'd like to stay away from the crowd perception and kind of almost counterplay what the rest of the markets are doing in order to succeed. So I call this a pretty bullish sign for crypto, and it's looked like this for a couple weeks now. So mind you, it isn't something that's immediately going to take effect, but given enough time where the funding rate is looking like this, it's going to be pretty promising for the results. All right, another important thing to be looking at right now would be the MVRV of Bitcoin. And we have seen basically since the initial week after the all-time high, after there was this big retracement, mostly negative funding rates outside of just a few blips on the radar where it was able to recover into positive range. It's been mostly negative with traders really, really getting hurt. And there's a lot of pain based on what we're seeing here. Generally speaking, I drew this negative 15% line here for a reason. If the MVRV goes under this line, it indicates that we are at an extreme 5 to 10% scenario where trader returns are really, really in pain to a point where things historically will turn around, at least to get the MVRV out of the negative 15% beyond range. And you can see it happened almost instantly back in early December when there was this huge drop off. Traders were in a ton of pain. And then even though the price was kind of retracing gradually, it was getting enough juice going up to bring the average trade returns back up due to all the dip buying that was going on. And then it proceeded to plummet right back down after a couple more legs down. Early January was a really rough time for crypto. I think around here was the first time it dropped below 40K in like 4 or 5 months. And it's kind of fluctuated here. Then this huge leg down that happened last week really sent it into super negative range. And once it did get into super negative range, there was a bit of an alleviation, one final leg down, and then up. And when it went up, the MVRV has recovered with it gradually. That being said, the 30-day MVRV for Bitcoin is still at negative 8.2%, meaning it's a better time than average to invest in Bitcoin, or at least add to your position, open a new position, because other traders are in pain. And generally speaking, this MVRV metric will hover around 0%, no matter how many days, weeks, months, or years go by, no matter what time frame, whether it's 30-day or something else. We can look at how the average MVRV looks for comparison, so we can see historically how much we are in the red right now versus green by combining, 1 day MVRV, 7 days, all the way up to, I believe, 365 days. So I went from 1 day all the way up to a year, combined them all together to give us an average MVRV output that is really indicating that we are still in very negative range. The midterm, obviously, we just looked at is pretty far down. The short term is far down. The 1 year MVRV has gone into negative territory, which is shocking because 2021 was, of course, a very, very good year for crypto overall. But this is a good sign. Look at how it actually dipped below where it was back from mid-May all the way to mid-July. Don't pay too much attention to what the actual number is. Kind of just use this chart for comparative purposes, and you can clearly see that the negative MVRV is at a pretty historical point. I'll even back it out to about 5 years so we can see anything that was actually approaching as far negative as it is now. And obviously, the last time we were this low was Black Thursday, and that's when prices dropped half to about 80% from their market caps universally across crypto, and that was obviously a dip that if bought would have made you very successful very quickly, because from Black Thursday, if I highlight that and I shift up from Black Thursday all the way until the first real big all-time high of 2021, that was about an 1,105% gain for Bitcoin's price. With us being down here doesn't necessarily mean the prices are going to turn around instantly, but it means all things universal, it is a much better spot than usual to justify a buy. So that's MVRV. One final thing on MVRV, which can kind of illustrate what's going on, not just with Bitcoin, but altcoins in general. This is our MVRV opportunity and danger zone divergence chart, and it indicates how close we are to one of those historical opportunity zones. It's, of course, going to go through a refresh right now. It always likes to do this as soon as I open it up. But what it's going to show as it compiles these numbers is many altcoins are at or actually past this green dashed line. And going back to this average MVRV, there's a theoretical line that would be drawn in an extreme zone where it's at like a 5% best zone. And that would be somewhere around there. And whenever the MVRV between all of these different time frames goes below it, that's the equivalent of it going above this green dashed line on this model. And Bitcoin, it's still compiling all of the time intervals. You'll see 6 bars on each because it's combining the 1, 7, 30-day, 90-day, 180-day, and 365-day. Bitcoin is looking to be still in a pretty good zone, but altcoins, many are in an amazing zone. XRP is getting absolutely hammered right now. So it's in a very, very good MVRV spot. Doesn't mean it's going to turn around or it's the best altcoin to buy, but just note that traders in that asset in particular have been in a lot of pain. 1-inch Aave, Chili's, Compound, Loopring is one that's been quite interesting. It had a very good early part of this past week and then kind of retraced back down. Uniswap has been getting a lot of trader pain as of late, the graph as well. So this is a great model if you guys would like a quick resource to kind of have a snapshot as to how much trader pain or trader euphoria people are in at any given spot. You know, the only ones that are really in decent range right now and actually in better than that, or I guess worse than average spots, it was Matic until recently, but I think it's had a pretty decent couple of days. The Sandbox looks to be the only one on this model from the top 100 or so assets that we have MVRV metrics on to be in a really profitable zone or somewhat profitable zone for traders, and it's not by much. All right, so that's MVRV. Since we're about half an hour after, I just want to ask Balresh to get that poll up so we can have a few altcoins to look at for the last 15 or so minutes of the call.
Okay, so everyone in chat, please put your assets down that you're interested in, and I will gather them and create a poll out of it.
Thank you, thank you. All right, so we covered circulation, daily active addresses, MVRV, and funding rate. Next thing we can look at really briefly would be the social metrics. Social volume-wise, nothing too special going on. It's been kind of a back and forth with Bitcoin, but look at social dominance. I think this is actually quite interesting. I actually had a post up about it yesterday, and I wanted to illustrate what's going on here. So the dominance of Bitcoin right now, which is essentially the percentage of discussion related to Bitcoin versus the rest of crypto, appears to still be quite low. It has been on a very gradual rise, but if you look at last year, this was up at around 35 to 40% of all discussions related to Bitcoin. And when things tend to be really high like that, it's in a vacuum a more good thing than a bad thing, because when Bitcoin is ignored, like it was starting to really show back in late October, that tends to mean that people are taking their money out of Bitcoin and putting them into speculative altcoins. Many of those altcoins have validity, of course, but when Bitcoin is being ignored while being the primary asset that keeps markets afloat, it tends to lead to a quick collapse if Bitcoin isn't quite getting the volume that it needs to maintain those market cap levels. And very clearly, just about 2 weeks after the really sudden drop in social dominance for Bitcoin, that's when we had this big retrace. And since then, you know, ever since late November, social dominance has picked up a little bit, but it's still fractional. It's less than half the ratio of discussion toward Bitcoin than it was a year ago. And that's really interesting because we simply have had an amazing year for crypto in 2021 that really encouraged people to get into altcoins due to the insane price action that, you know, many of those DeFi and NFT assets experienced. And it's hard for many traders to justify going back into Bitcoin when all of the big volatile swings are happening in altcoins. Those are the ones that you know, traders are really seeking, and it's going to take some pain and some lessons learned for people to want to return back to Bitcoin and start discussing that as the crux of cryptocurrency markets and why they fluctuate the way they do. So keep that in mind. I think this is a very interesting chart to keep tabs on. And I think that an uptick in social dominance, a continuation of this on a daily basis, will be good for the markets overall. And Maxim, if you're with us right now, I'd love to hear your take just on the social end of crypto right now, to hear if you have any other thoughts or things you've been keeping an eye on.
From the social, it's mostly about finding a sweet spot for people turning negative or reluctant, or let's wait and see. And I think we've got quite enough from it. Okay, you never know if it's enough, but for instance, I think Binance shared a few days ago a report on crypto, and they, if you read it, it basically suggested, okay, you should sell now or buy lower. And it's a kind of all reports, be it from Binance or I don't know, Coinbase or Kraken, doesn't matter. Any exchange, they just want you to trade, and they generally always feed you so that it fits your expectations or like feelings or emotions. And it does represent mostly feelings of the crowd. So I would say on social part, yeah, it's bearish enough. And second part you would see, but it's a kind of mix of the social and on-chain data, liquidations, pain, all these kind of things. And we've seen waves of liquidations or cascades of liquidations now in DeFi 2 coins, Spell, Meme, all this around this area. Yeah, it's been like really a lot of money has been lost there. So you could say pain also sizable pain. Expectations from majority will go lower. From social point of view, is good enough to my taste, but it's just my taste, you know. And yeah, and exactly, yeah, your points are very good. Just look into buying the dip, yeah, like we decreased again. It's a very low social volume for this.
Yeah, which is a good thing. We want to be seeing less interest in buying the dip, because when the crowd unanimously thinks that this is the dip to buy, it generally is not the dip to buy. But when people lose interest in buying the dip, that tends to be when skyrockets occur. So obviously we had this huge bunch of social volume related to buying the dip back here, and a week ago when we had that last major leg down, and prices kind of just, you know, got people's hopes up and then dropped back down. I know those colors clash a little bit, but there was a big drop right there. And then gradually, you know, the buy the dip mentions came back to normal, and that's where they are once again. So all things considered, this is a good sign. If we look back to like the last year, we can clearly see that all of the bunches of buy the dip happened in early to mid-May. And then as they started to fade away, especially down here, this was the sign that a bottom was very, very close. And we see that pattern all the time. You know, even right here for a very short term dip buy opportunity in early December, everyone was saying it's time to buy the dip, but the price just refused to jump back up the way they were waiting for. And then finally on December 19th or so, we had this mini dip to buy. And then of course there were a lot of fundamental reasons that the price dropped back down again. But you want to look for those spots where the crowd is not particularly happy with Bitcoin and they have a lot of FUD, a lot of doubt. I'm just curious. I haven't looked at this yet, but I wanted to look live on the stream just to see how the words FOMO and FUD are fluctuating right now. Nothing really too special going on if I share the axes. So thank you, Max. Appreciate it. So overall, FUD tends to get mentioned a little more than FOMO. And right now, that word FUD is starting to pick up steam while FOMO isn't. And generally, this is kind of like similar to buy the dip, where people mention the word FUD to kind of make fun of those people who are doubting it, implying that they are not doubting it. And you want those people who are making fun of the FUDsters to be having FUD themselves, right? So generally speaking, you want the red bars here to stay low. FOMO really doesn't matter. I'm just using it as kind of a contrasting term, but you want to see when FUD is low and things like short or shorting is high. And obviously funding rate is the best resource for seeing how much people are shorting, but a lot of times the word will be mentioned more when the shorting is actually happening. And you can see that there was a lot of shorting right at that local bottom that happened about 10 days ago. Price went up and now it's gradually going back down. So that's just a few things on the social end that I think are quite interesting right now. I'll do just a couple more minutes of things, Max, because I promised from last week that we would look at Ethereum. So I'm going to take just a little bit of time to breeze through a few of the topics there, and then we'll answer some questions for some assets you'd like us to deep dive on.
Okay, everyone in chat, please use the chance to cast your vote before it's closed.
Thank you, thank you. So Ethereum, circulation-wise, it isn't really in as good of a spot as Bitcoin right now. If we go back to the last year, we can see the big drop occurred when about a week or two after markets retraced in May. We had this big circulation spike in Ethereum. Prices were super volatile. And then look at this light pink line, which is the 7-day moving average, and how it just gradually dropped. And even now, it's not nearly where it was a year ago. Whereas we looked at Bitcoin and it's still above where it was a year ago. Ethereum is below, and that's concerning, considering the price of Ethereum compared to where it was a year ago is still about twice what it was then, sitting at around 24, and last year it was at 13, just a little over 1,300 or so. So just under double the price of where it was a year ago, yet circulation is down. That's a concern, and our NVT model should reflect that. I'm going to the Ethereum tab, and bingo, we see a big red bar here indicating that we are not getting the justified amount of circulation to imply that Ethereum's market cap can continue to increase. Look at the long stretch here that started in May 2020, just a couple months after Black Thursday, and what happened to the price during these green bars, and how even during the semi-bearish bars, we were able to see a new all-time high for Ethereum, but that was mostly just due to Bitcoin and many other altcoins all surging. So Ethereum was going up kind of by osmosis, but it certainly wasn't leading the charge of these price surges. Ethereum, probably more than any other NVT chart I've seen, really follows the path of what these color displays are showing. You can look at this stretch of red here and how prices dropped during that time. You can look at how it even happened during the semi-bearish bars back in 2018, and even back in 2017 when things were mostly green. Look at how prices absolutely soared. So good to keep a close eye on circulation for Ethereum. We can also take a look at daily active addresses, and they're showing a similar story. It's been mostly a downtrend where we had this one anomaly where the daily active addresses got up to 770K. But if I smooth move average over 30 days, you can see that it's been a pretty big drop ever since about a week after the all-time high happened, where it almost scraped 5,000. It's fallen gradually back down to an average of about 512,000 active addresses per day, after being back in mid-May as high as about 684. So that's a concern as well. There aren't nearly as many Ethereum addresses interacting on the ETH network as we would hope for to justify staying or returning back to those 3K plus or 4K plus levels. So keep that in mind. It doesn't necessarily mean that Ethereum is a bad asset or it's a poor long-term investment. We believe in Ethereum quite strongly here at Santiment, but from a utility perspective, it just indicates that Bitcoin is looking a bit better. On the MVRV side, if I draw those negative 15% lines once again and positive negative 15% lines, right, close enough. So we are actually in a historically opportunistic spot for MVRV. It isn't quite where it was last week, where it was at a pretty extraordinary negative 21% or so. Now it's back to about negative 16, negative 17, but it's still double the standard deviation down compared to where Bitcoin was. And that's a good thing. It means that Ethereum is the traders involved in Ethereum are in a lot of pain right now. And if you were to buy into that pain, it would historically lead to good results. The last times it was really in these zones was late September, where things bottomed out right around here. And then before that, you know, late June and late May, respectively, where we had a couple different bottoms occur, a little more volatility. It almost reached that danger zone once again, and then it blasted off. Even before that, look at how it bottomed out perfectly here in late February of last year, and then price absolutely soared from there until it got into super positive range. So MVRV wise, it's actually looking better for Ethereum than it is for Bitcoin right now. Funding rate, really quickly, not a lot going on. It's pretty flat for Ethereum. Historically, Ethereum is a very longed asset. These spikes were even larger than Bitcoin's at the time in the early part of last year. And now we are in a negative zone, but just barely. It isn't really anything to write home about. And, you know, we did see similar negative spikes back in June and July, which led to bottoms. But there are other assets that are in much more negative territory than Ethereum right now. You can see Ethereum right now across 5 different exchanges. It's at just a very modest negative 0.001. But, you know, comparing that to Anchor at negative 0.019 or Zencash at negative 0.021, you can essentially call it about even right now. Oh, one other thing I wanted to show for both Ethereum and Bitcoin is whale behavior, which I think is important. For Ethereum, we tend to see the best success by looking at the really enormous addresses that are holding between 100K to 10 million. And that is indicating that we are actually seeing a rise in the supply held by these mega whale addresses. It's been on a steady rise since late September, where they were holding 43.3% then and 44.5% now. So give or take about a 1.1 to 1.2% increase over that time span. That's a pretty good sign. On the Bitcoin end, let's go down to, let's just switch templates here. So on the Bitcoin whale end, we look at addresses holding between 100 to 10,000 as kind of that top tier of retail traders that are actually active, and there aren't too many exchange addresses that fall within this range. There still are some, but it's kind of that highest tier of retail traders, which is why we like it. And this pink line here indicates you know, that we're still far down from when they first started taking profit, as I mentioned earlier in this call, in late October. And ever since the second week of January, we've actually seen a nice increase where they have accumulated about 0.35% of Bitcoin supply, which is a humongous USD value if you actually were to calculate that. I believe it's in the billions of dollars. If not hundreds of millions, one of those. And this is a good sign. It means that even though prices have dropped, especially beginning here, so if you just look at, you know, where it kind of topped off around the 12th and 13th and then dropped off again, whales have ignored that drop off, and they've actually just accumulated more from those weak hands who have kind of exited their positions because they're no longer believing in crypto right now. So top key stakeholders right now, they're looking to be pretty confident that this drop will not last for too much longer. All right, we're about 10 minutes until the hour mark comes up. So I think this is a good time to see what kind of results we have for the poll, and I can bring up a few different assets for you guys.
Okay, place 1 in the poll right now is Lido DAO, LDO.
Interesting. Yeah, I haven't heard about that one in a while. Now, Lido is, I believe, yeah, it's an ERC20, but we do have some limited data. We don't have MVRV, for example. We also don't have funding rate data because it's a pretty small cap asset. But we do have circulation, we do have address activity, and there are definitely some things we can look at here. If we look at the year chart, it appears that a few key dates have absolutely dwarfed the axis on here. So I'm going to just zoom in past the latest massive spike, and we can see what's going on. Overall, it looks like circulation is going up over the past 6-7 months or so. Circulation is quite volatile, obviously, due to many of these massive spikes. I couldn't tell you exactly why these spikes occurred due to my lack of familiarity with the asset, but circulation rising as the price is falling is a good thing overall and something we should take into account. On the daily active address side, I'll go right after the latest huge spike of daily active addresses occurred. And interestingly, the addresses are kind of moving in the opposite direction. They're kind of moving down as price is moving down. So that's not so good of a sign. The average going on back in mid-September was about 355 addresses per day. It's now down to about 154 per day. So more than half of the addresses that were interacting back then are no longer interacting on a daily basis. Mean dollar invested age, not much going on. It appears that dormant investments are staying quite dormant. Interesting to see that the mean dollar invested age is absolutely massive right now at 4,500 days. That's almost the entire history of crypto right there. So I don't know if that's an anomaly or not. Hard to say. Just curious if there could be any interesting whale data here. So LDO is currently priced at 139. We would want to look at addresses holding probably between $100,000 and $10 million. Let's see what the very top one looks like. Okay, so the 10 million to infinity holds about almost 80% of the supply. So these look like the two, maybe even 10K to 100K. So if I merge all of these together, I'm going to click merge, 10K, 100K, 1 million, confirm. This shows what the supply held is by that tier of 10,000 to 10 million LDO coin holders are doing right now. I'm going to zoom out to at least the last year. Let's go all the way back 4 years or so. Yeah, it's a constant rise. Wow. Okay, so it's only existed since December of 2020.
And you can, let's plot on top of it to compare retail. I don't know, like 1 to 100 coins.
Sure, yeah. So if we go to a merge 1 to 10, oh, it's doing a little bit of freezing right now. There it goes. 1 to 10 and 10 to 100. Confirm that. And it looks like they're actually showing some pretty big signs of accumulation as well. That being said, their supply held is fractional. They hold only about 0.013%, 0.014% of the total supply, while the 10K to 10 million addresses.
You can add also 100 to 1,000, still kind of small.
Sure. 100 to 1,000, same thing. Let's see where there's actually some dropping going on. So interestingly, Max, it looks like all of the tiers under the 10 million to infinity are all gaining a percent of the supply, because the largest holders, largest addresses are all distributing to the smaller ones out there right now. What would you make of that yourself? I'm very curious. Max, you with us?
Oh yeah. Sorry, I was. I think it could be that. Yeah, you see one change when they changed places. But this could be just an address which the main staking address.
I'm curious what it would look like by total addresses. That can be a nice indicator.
Yeah.
Let's see. By distribution, by number of addresses. Here we go. I'll maximize this. Let's take off all of the very small addresses out there. We'll start with 100 and above. So 100 and above, the amount of addresses have really soared. They're up to about 4,700. 1,000 to 10,000, they're up to 1,758. 10 to 100K, they are up to 439. 100 to 1 million, 121. And it looks like, so if I take off all of these except for the very top one, 10 million to infinity. Oh, that one's actually not existent. So the one below that, I should say. 1 million. Well, that's actually interesting. Why? There it goes. So there's the 10 million to infinity one has pretty much been a constant. It actually went from 21 to 23 to 22, and just recently, as of 2 weeks ago, went back down to 21. While the number of million to 10 million addresses are growing. So that's a good sign, in my opinion. It means that the LDO's two largest tiers are either maintaining water or they're starting to grow in number.
Yeah. I would say it like there is no specific opportunity inside the LDO. Just strong hands are holding, or even like small are buying. It's all now related to the general market. Once the market recovers or move up, it will move relatively easily up. So there doesn't seem to be any worries.
Not much resistance,
or concerns among the token holders. So just all of them accumulating.
Right.
So all depends if we get to the new lower lows in the whole market. Yeah, that could bring in the kind of level of panic. Then the behavior might change. But as it's now, actually, LDO is indeed a relatively safe bet.
Yeah.
It goes down with the whole market, but it doesn't show any specific bad behavior.
Yeah, especially with it being such a young asset. You know, young assets tend to be more tied to big upswings and big downswings to what the general market is doing. So LDO is certainly no exception to that. It was at an all-time high of above $7 at one point, but very swiftly has turned back down. And it's interesting to see how supply and exchanges have risen over time. That being said, the actual amount of LDO on exchanges is still well under 1%. So it's a very, it's one of those assets that is very kept away from exchanges for the most part, whether that be due to just the nature of the coin or due to a lack of listings on exchanges thus far during its short history.
It's mostly decentralized here. I don't think they're much concerned about centralized exchanges.
Yeah. So hopefully that was a little helpful for LDO guys, and I would love to get one or two more assets from Balrash so I can take a look at those.
Yep, the next in line would be MakerDAO, MKR.
Sure, let's check out some Maker. We have some staff on Santiment that are very big believers in this coin for what it's worth. It's been a long-standing ERC20 asset with some good fundamentals and good reasoning for it existing. So if we look at the last year, the circulation has been kind of up and down. we got this huge bunch of circulation going on right here, but with prices dropping the way they have universally, we haven't really seen that take effect yet. Overall, though, I think it's a good sign that so much Maker has been moved in recent weeks, because when prices start to turn around, those assets that are getting a nice steady increase in circulation are going to be the ones that really recover quickly. So based on just utility from a raw, look at the amount of Maker being moved, this is a pretty good sign for Maker's future once crypto stabilizes a bit. MVRV wise, actually before MVRV, we'll just do daily active addresses. Not really much to say. We're seeing a similar slight uptick in bunching of active addresses over the past week, but nothing really too special. And it's been a pretty concerning drop in active addresses since last year, actually. We got to a high of about 2,815 daily active addresses in early February. And for comparison, we're at 523 now. So it's really dropped off quickly for Maker. But on the MVRV side, let's see how close we are to those opportunity and danger zones. I'll mark the negative 15% mark. And I'll mark the positive 15% mark. So we are back above the super opportunistic zone that we had seen back 2 days ago. That being said, the MVRV for 30-day is still at negative 12%. So that's about where Ethereum was, and appears to be a pretty good sign that there's still a lot of trader pain going on that you can buy into now if that's something you'd like to do. The last time we were really in a positive danger zone, or danger zone, I should say, because of positive MVRV, was early November, when we hit a then local top of around 3,300, a little above that. And then look at the big drop down that really happened after some volatility occurred, and gradually just pushed the MVRV into negative territory, where it's mostly been for almost 2 months now. Also curious for the what's looking like on the MVRV opportunity and danger zone divergence chart. And Maker is sitting here at about in the semi underbought territory. So it's not exactly in a huge opportunistic zone, but it's still in a better spot than average compared to many. What did I say about it always wanting to refresh as soon as I open it? I don't know what it is about this model. Anyways, we can also look at the custom metrics that I have for Maker, because I think there was something interesting I found over there. Okay, so if I switch this to Maker, average MVRV doesn't show up. Positive negative sentiment, I think, is an interesting one. I'll get rid of the dwarfed spike there. And look at how we've seen some really positive euphoric lines indicating that there's been a high ratio of positive comments compared to negative. If I zoom this out, I'll go 1 day here, and then I will, can't do a moving average. So yeah, I'll make it 7 days to make it simple. It looks like there was this big euphoric spike here that didn't really change anything. Sentiment wise, yeah, I mean, as long as we're not in these big positive territory ranges, we're not in grave concern. And right now it's mostly been negative when zooming out on Maker. And that's a good thing. That means there seems to be more doubt than there is greed related to this asset. A couple more things on Maker. I think whales actually funding rate really quick too. We did see a few big drops in funding rate for Binance. I want to see how it looks on the average funding rate one as well. Maker is right. Nope, that's Matic. There it is. So Maker is actually one of the few assets in the top 150 or so that is slightly in positive territory, but this can essentially be referred to as neutral when all the funding rates together are combined to give a an output of about 0.001. So all things considered, nothing really too worrisome here in either direction for Maker. But on the whale end, I definitely saw some interesting stuff going on about a week ago. So Maker is at about 1817 right now. So that sweet spot for whales, if we look at, you know, $100,000 to about 10 million, we would want to go, if I'm counting correctly, 1,000 times about 100 to 100,000. Let's see how this looks. And let's see how it looks with price plotted on top. I'll make these bars to make it easier. Full screen that. And here's where we're at right now. It appears there was a huge wave of accumulation. This is, of course, number of addresses. So I might actually look at supply as well. But first, as far as number of addresses at this tier, it's definitely grown pretty substantially in the past year. There were about 402 addresses a year ago for these whales, and now we're up to 453. So give or take about 12–13% increase in the number of addresses going on. In terms of the supply held by these addresses, I think that's going to really be interesting. Actually, I got a quicker way I can do it because I have a template. I'm just going to go load, open my whales absolute values right here. Get rid of that. And I'm going to merge all three of these. So, okay, so that might be a little too much to look at because this tier owns a little over 3/4 of the supply. If I were to just look at 100K by itself, that's 15%. Okay, so we'll get rid of the 1,000 to 10,000 and only look at 10 to 1 million. And it's been kind of a pretty steep drop, interestingly. I think what set off my alarm bells last week was this drop. As it was starting to rise, it then suddenly dropped back down again. And if we go back to, let's say the last 3, we'll go even 4 years. It's been, okay, this is too much of just a distribution indicator to me, indicating that there's just a constant stream of
no, it's actually good.
Out of
it means what it means, it's not a concern. It's a long time big whales slowly redistributing it to a new wave of holders. It's okay. For the maker, what is important, in my opinion, it's actually a piece of fundamental information that in the last carnage, how you say it, when there was a liquidation of around, I think, 300 million went through Maker official liquidation procedure, and it worked nicely. So it processed everything. It's I think it's the biggest so far. Even in 2020, in COVID destruction, it was less. It was at that time like 60 million. And there were some complaints. Something didn't work. This time, 300 millions were liquidated and it worked nicely. So fundamentally, it is as strong as never before. And now if you add that big whales keep slowly redistribution, that's a normal sign. I would rather look for those holding, let's say, what is the price of Maker now? Around 3,000?
1,800.
Oh, okay. Well, it went down from the last I remember was, okay, 1,800. So let's say anything above 50,000 will be like 300. Yeah, let's say everything between 10 and 100 coins. Yeah, this is a kind of active, and how big their supplies.
So they hold just under 3% of the supply.
Yeah, keep it line, and then 100 to 1,000. This may be like a little bit more funds. Okay, they
they hold about 10%.
Okay, good. Then I would take, as long as we don't see panic or decrease of their holding, we're kind of, yeah, we're definitely okay. Because they are the ones who, I suppose, actively, and they are reacting to the market events. And this 10 to 100, this is a good one. I'll tell you why. You see the decline back in, was it June of 2020?
Yeah, the big drop here, yep.
So this is a typical crowd behavior. The maker at the time, it's difficult to see here, but it was the first wave pump after May COVID dump. And no, Nita, I just okay.
I'm just adding the price against Bitcoin to make it a little more clear how the price has been
Bitcoin
impacted.
will not work just because I remember situation back then. Maker together with Bitcoin grew quite a lot. And the first impact on a normal human brain, you take the profit after long time of losses or pressure. And there was, before this COVID dump, quite some time we suffered. So they took it, and they always do it early. I mean, I also do it from time to time. It's normal behavior. So this group is really representing some good group of people you want to observe. For now, they don't do much. It's like they keep their balances, and it means they're neither panicking, no thinking that we are in a good position to go anywhere else in any coins. So I would keep an eye on this group 10 to 100 tokens. Yeah, if you increase to the last 3 months or last 6 months.
There's the last 6 months.
Yeah, so they're behaving. Take. Yeah. It's like a lot. Okay. So if you are not in the market, the moment they start decreasing their position, it's a good sign. Yeah, it's like means they're satisfied with whatever they made. Maybe you will miss the first pump of maker whenever it happens. But the moment you see maker increasing value, 30%, 20-30%, and this group of holders start decreasing their position, it's a good time. They will react too early. They will exit their position too early. They did it in the past, and they will do it again. Yeah. So this one I will keep an eye on. It's my personal. If I would be into maker more actively. If you are not active but long term, maker is one of the top coins, in my opinion, on Ethereum based. There are a few others too, but making is definitely a good choice. So this is the way how I would think when analyzing this. Try to spot a group and we spot it which behave like normally crowd behave, and take into account when you build the next position.
Mm-hmm. Yeah, especially when you see some correlation with the price alongside one specific tier. That's some really good alpha that you can hang on to and constantly check, you know, this 10 to 1,000 coin tier, for example, for Maker, and see some pretty nice results. When they're confident, prices tend to rise. When they're not confident, prices tend to drop. That's exactly what makes some really successful trading strategies. So this was super helpful. Thanks, Max. Yeah. All right, so we're about hour and 15 minutes in. I think we'll stop here. I know there was probably a third asset that people wanted to look at, but for the sake of time, I think this is a good cutoff point, and we can kind of just roll over that, whatever that next asset was, into next week and make sure we take a look at that, if that sounds okay to you, Balresh. Excellente. All right, guys. Well, we will wrap up here. Obviously, as we talked about at the beginning of the call, the Fed's decision has a lot of say in how prices are moving right now. But as Maxim suggested, the worst is likely over, at least in terms of the panic related to the Fed. You know, we still have to look at on-chain metrics and how crypto is able to act independently from fundamental events. But all things considered, we experienced a lot of blood in the streets. And when there's blood in the streets and a lot of pain and doubt, that generally, historically, is a better time than average to start dipping your toes back in. So I hope this is helpful. Make sure to go to your account settings and check out that referral link here if you haven't already, and spread that around, because we share 25 to 35% of the sign-up cost with you just for referring them. We appreciate every like, every word spread about our videos and retweet of our tweets as we continue to grow with you guys as our great community. And I'm looking forward to chatting with you all next week, and look forward to a few more videos in between now and then. So take care for now, stay safe and warm, and enjoy your weekends.
Yep. Thanks, everyone.